Parents, I need about 15 minutes of your attention today because something has changed in the financial world for our children. And I don't want parents hearing about it 5 years from now and saying, wait, why didn't anybody tell me? There is now a new investment account for eligible children under 18 called a Trump account. Some qualifying children can even receive a $1,000 contribution from the federal government. But before you get excited, no, every child under 18 does not automatically get $1,000. And no, this isn't simply free money for your child to spend. What I want to show you today is much bigger than $1,000. I want to show you why your child's greatest financial advantage may be something you cannot buy for them later. Time. Don't let your child start at zero. Let's talk about exactly what a Trump account is. I will start with the basics. A Trump account is a new type of individual retirement account created for eligible children. Generally, an account can be established for a qualifying child who has not reached age 18 by the end of the applicable year and has a valid social security number. And here's something that makes this conversation especially interesting. During the special growth period, your child doesn't need any income for contributions to be made to the Trump account. That matters because parents are accustomed to hearing your teenager needs legitimate earned income before we start talking about IRA. This gives families another opportunity to begin early. But this is not an ordinary savings account. It is designed for long-term investing and comes with special rules. So don't hear account for children and think, oh, wonderful, we'll put the birthday money there and take it out for a PlayStation next year. No, that's not what we're building. Let's talk about who actually gets the $1,000. Does my child get $1,000? That's the question most people ask. Now let's clear up the biggest misunderstanding I've heard. Boss lady, every child under 18 gets $1,000. Not exactly. The special one-time $1,000 Treasury contribution has additional eligibility requirements. Generally, we're talking about a child who is a U.S. citizen, 2, has a valid social security number, 3, was born between January 1, 2025 through December 31st, 2028, and lastly, has the required election made. So if your child is 12 years old today, your child may potentially qualify to have a Trump account established, but that does not mean your child qualifies for the government's $1,000. Account eligibility does not mean $1,000 eligibility. That's why we have to stop getting financial information from headlines alone. We need to read, ask questions, understand what applies to your child. But boss lady, I don't have $5,000. Here comes the next objection. Boss lady, I heard you contribute $5,000 a year. I don't have $5,000. Okay, who said you had to start with $5,000? Parents, don't allow a maximum contribution limit to become your minimum expectation. Under the current rules, most regular contributions during the growth period are generally subject to an aggregate $5,000 annual limit, with certain exceptions. But $5,000 is not me telling you if you can't contribute 5,000, don't bother. Absolutely not. Maybe your family starting point is $25, $50, $100, $250. Maybe grandma contributes for a birthday. Maybe grandpa contributes at Christmas. Maybe auntie contributes instead of buying another toy. We're not competing with anybody. And please, do not take your rent money. Don't take your grocery money. Don't empty your emergency fund because Boss Lady said investing is important. That's not financial planning. We're talking about building responsible responsibility with money your household can responsibly allocate toward long-term goals. Start where you are. You need to stop buying toys. Parents, let me ask you something. How many toys have you bought your child that you cannot even find today? How many Christmas gifts disappeared? How many expensive shoes have they outgrown? How many gadgets have they broken? Now, here's the other question. How many assets have you bought your child? I'm not saying stop buying toys. Please let these children enjoy their childhood. I'm saying add another category. Gifts, experiences, assets. Birthdays, make it gifts plus assets. Christmas, make it gifts plus investment. Graduation, celebration plus financial contribution. Imagine grandma asking, what does she want for Christmas? And sometimes you can answer, she has enough toys. Help me build a future. Do you understand the mentality we're creating? A child who grows up believing my family owns assets. Investing is normal. Every dollar doesn't have to be spent. That's bigger than the account. That's financial culture. Now, here's something many parents don't know. Under qualifying arrangements, employers can potentially contribute toward Trump accounts for employees or their dependents. Qualifying employer contributions can receive special tax treatment up to $2,500 per year, subject to the rules and applicable contribution limits. So here is your homework. Go to your HR and ask, does our company offer or plan to offer a Trump account contribution program? That's it. Don't go into HR tomorrow saying, Boss Lady said you owe my baby $2,500. Please don't get me in trouble with your HR department. We're asking questions. Because part of your financial literacy is understanding your entire compensation package, not simply your paycheck. What retirement benefits do you have? What insurance benefits? What educational benefits? What family benefits? And now, does your employer participate in a Trump account contribution program? Learn your benefits. Now I want to slow down because after everything I've told you, some of you are ready to say, Boss Lady, send me the link. I'm opening it today. Hold on. Don't open what you don't understand. A Trump account isn't simply a bank savings account. During the growth period, investment options are restricted to qualifying investments, including certain broad U.S. equity index mutual funds or ETFs that meets the requirements. Withdrawals during the growth period are also generally restricted. Why? Because this is supposed to be a long-term money, not shopping money, not vacation money, not I'll take it back next year money. Long-term money. And when the special growth period rules end, traditional IRS rules generally become relevant. That means taxes matters. Withdrawal rules matter. Potential penalties and exceptions matter. That's why I keep saying the account alone is not financial education. This may be the most important part of this entire video. A parent asked me, Boss Lady, what exactly are we building? Here's my answer. We're building a head start. I'm not promising that one account will make your child rich. That's not responsible financial education. We're giving money something incredibly valuable, time. But we're also building something else, behavior. Imagine your child growing up saying, I own investments. My family taught me about assets. I understand compound growth. Understand that every dollar doesn't have to be spent. I know the difference between making money and building wealth. That's what we're building. We're building a financially prepared adult. And why are we building it? Because that 5-year-old is going to become a teen whether you're financially prepared or not. That teenager is going to become an adult. They're going to encounter credit, taxes, debt, insurance, investments, employment, retirement, and money decisions. Why wait until adulthood to start the education? And this is important. The Trump account is one tool. It isn't automatically the perfect tool for your financial goal. Depending on your family circumstance, we may also need to talk about college planning, 529 plans, custodial investment accounts, savings, emergency funds, and eventually for a child with legitimate and income, potentially a Roth IRA. Different accounts have different purposes, tax treatments, restrictions, and advantages. So please don't walk away from this video saying, Boss Lady said everybody needs a Trump account. That's not what I'm saying. I'm saying every parent should understand the opportunity and determine whether it belongs in their children's financial plan. Parents, imagine your child at 18, graduation day. They're standing in front of you, and one day they ask, Mom, when did you start preparing this for me? And you smile, baby, when you were little. That's powerful. Because one day our children will inherit the results of decisions we're making right now. We cannot give them everything, and we don't need to. Well, we can give them knowledge, time, exposure, better financial habits, and then appropriate assets. Your child shouldn't have to spend the first 10 years of adulthood discovering everything about money the hard way. So here's my challenge. Don't finish this video and say, that's interesting, and then forget about it. Ask yourself 3 questions. 1. What am I building for my child? 2. Why am I building it? 3. How should I build it? If you don't know the answers yet, that's okay. That's exactly why we're having this conversation. Schedule your child financial future consultation with me. We're not meeting just to open a Trump account. We're going to talk about your child, their age, eligibility, your goals, what you're already doing, what you can realistically contribute, what you're trying to build, and which financial tools deserve consideration. Go ahead, schedule your child financial future consultation today. Don't let your child start at zero because the account is only the vehicle. The destination is a financially prepared adult. I am Boss Lady, and here is my Boss Lady truth. Don't just raise a child who knows how to make money. Raise one who knows how to keep it, grow it, own assets, and build with it. Start early, teach money, build assets, and whatever you do, don't let your child start at zero. I'll see you at the consultation. The link is below. Please go ahead and schedule your child financial future consultation today.